Welcome back to Explain the Charts, everyone. Today, September 11th, 2025, we're dissecting Meta Platforms, ticker symbol Meta, which currently trades around $750.90. Recent headlines paint a mixed picture, with analysts revamping their outlook ahead of Meta's crucial Connect Developer Conference on September 17th. The company is aggressively repositioning itself towards artificial intelligence, a narrative that fuels much of the current bullish sentiment. However, regulatory concerns, particularly new EU regulations impacting WhatsApp, are causing some short-term dips in investor confidence. Let's turn our attention to the daily chart and specifically pinpoint a major catalyst, Meta's Q2 2025 earnings report released on July 30th. As you can see from this highlighted period, the stock rocketed after these results, with revenue growth accelerating and AI investments intensifying, truly destroying expectations. The close on July 30th was $695.21, which dramatically surged to an open of $775.20 and a close of $773.44 on July 31st, marking an impressive single-day gain. This event clearly established a new, higher trading range for Meta, underscoring the market's positive reaction to its AI strategy and financial performance. Zooming out to the full daily chart, we observe a clear long-term upward trend for Meta, especially over the past year. The price has consistently made higher lows and higher highs, indicating strong investor interest and underlying company strength. Immediate resistance can be identified around the $790 to $796 range, which coincides with its 52-week high of $796.25. This level could prove to be a significant barrier in the short term, potentially leading to some profit-taking. On the flip side, the area around $750 to $760, where it's currently trading, appears to be acting as immediate support. Should this break, the pre-Q2 earnings level of $690 to $700 would likely serve as a very strong support zone, having been the launchpad for the recent rally. Now let's switch to the 1-hour chart to examine more recent price action, particularly over the last few weeks. We can see a period of consolidation, with the stock mostly fluctuating between $740 and $770. Notice the increased volatility and a slight downward pressure from mid-August, as highlighted here. This coincides with some of the recent news regarding regulatory concerns and general market recalibration. The stock attempted to break above $790 in mid-August, but was met with strong selling pressure, confirming that as a significant resistance point. The overall volume has remained robust, suggesting active trading and strong participation at these price levels. Let's get even more granular and look at the 15-minute chart for the last few days, specifically from September 8th to September 10th. Here, we can clearly observe the slipping action mentioned in today's news. On September 10th, after a strong run, the price saw a sharp intraday dip from highs around $765 to the low $750s. This rapid decline likely reflects immediate investor reactions to negative news, such as the EU regulatory developments. The $751 to $753 range has shown some immediate buying interest, suggesting a minor support level forming in the very short term. Traders should watch for whether this minor support holds, or if the selling pressure intensifies, potentially testing lower hourly supports. Moving back to the daily chart for a broader perspective, the bullish case for Meta remains compelling. The company's strategic shift to AI, its strong Q2 results, and the upcoming Connect conference on September 17th are all significant tailwinds. Analysts such as Justin Post from Bank of America have reiterated buy ratings with an ambitious $900 target price for 2026, based on Meta's high growth rate and substantial AI opportunity. The successful launch of consumer-ready smart glasses and a clear AI roadmap at the Connect conference could provide the next major surge. Continued user engagement on Facebook and Instagram, driven by AI-improved content, is also a strong fundamental positive. Long-term investors see Meta as a key player in the evolving AI landscape, justifying its premium valuation relative to the S&P 500. However, the bearish arguments cannot be ignored, especially the impact of regulatory scrutiny. The new EU regulations for WhatsApp have demonstrably caused short-term price pullbacks. Any further tightening of regulations, especially in key markets, could weigh heavily on investor sentiment and Meta's revenue streams. Furthermore, trading near its 52-week high around $790 makes the stock susceptible to profit-taking, particularly if broader market sentiment shifts negatively. Traders should monitor global regulatory developments closely, as these external factors can rapidly change market perception and price action for Meta. A failure to deliver compelling announcements at the Connect conference or a lack of clarity on AI monetization could also trigger a significant correction. To recap our key price levels for Meta, we have immediate resistance at the 52-week high around $790 to $796. A breakthrough here would signal strong bullish momentum, potentially targeting the $900 analyst price. Immediate support is currently found in the $750 to $752 range. Holding this level is crucial for maintaining the current upward bias. A more robust support lies significantly lower, around $690 to $700, which marks the base before the Q2 earnings breakout. This would be a critical level to watch in case of a deeper pullback, offering a potential entry for long-term investors. The chart's overall health remains positive, but these levels act as important decision points for traders. Looking ahead, an unbiased prediction suggests Meta is likely to continue its upward trajectory, with a high probability, around 70%, of retesting the $790 resistance level in the short to medium term. This likelihood is reinforced if the upcoming Connect conference on September 17th delivers strong announcements, particularly regarding consumer-ready AI products and a clear roadmap for monetization. Conversely, there's a moderate probability, around 30%, of a pullback to the $690 to $700 range if the Connect conference disappoints, or if significant negative regulatory news emerges. Key things to look for in the coming days are the details from the Connect conference and any further updates on EU regulatory actions. Volume analysis around key price levels will also indicate conviction from buyers or sellers. Always remember to manage your risk, utilize stop losses, and stay informed on both the technicals and fundamentals before making any trading decisions on Meta.